And moving on to an argument that I think is worth highlighting, if not just as a discussion point, is this idea that amidst the stock market turmoil, amidst the turmoil that was set off last week, is commercial real estate or is multifamily a safe harbor in compared to that uncertainty, compared to that volatility? Will people start pouring in and buying real estate because at least things aren't going to swing wildly up and down? I'm not sure if that's completely the case. But I will say that that's an argument that we used early in the pandemic. I think it was perfectly valid that, we said, well, multifamily real estate is not subject to the kinds of wild swings in valuations like the stock market, because you're constrained by longer hold periods. And it's just naturally, whether it's because of that or for other reasons, it's just naturally a less volatile asset. It just doesn't jump around as much. However, as I mentioned before, the REITs, the NAREIT or the Avalon Bay and Equity Residential, Equity Communities.
Equity Residential.
Okay. Both of those two largest apartment REITs, they dropped as well. So if that's a communication of these apartment investors that has any relation to the kind of private equity that we are involved in, like multifamily syndication and other things that aren't necessarily traded like stocks, but are still commercial real estate investments, if that is connected in any way, then there's a chance that commercial real estate investors are a little bit bummed, are not as excited to invest. And again, like I said, reading in between the lines of this discussion about how much more debt was used to finance some of these real estate projects in 2024, you can kind of see, well, is there momentum, a kind of negative momentum of declining investor interests that's building, and will that result in more waiting and seeing, or will there be a reason for prices to go down? Now, this article, again, is a little bit more optimistic. I've been very negative, and I promise I'm going to land on my feet here with a positive note for the apartment market. But I thought it was just really important to recognize the challenges that that the current economic situation represents, and the challenges that multifamily operators are going to face, multifamily investors and acquisitions analysts are going to face as they look for the best deals and try to project the best futures for potential investments without having rose-colored glasses and thinking, well, no, investors are actually going to pour in from the stock market because they think that CRE is a safe harbor. This article uses data from Lightbox's CRE Activity Index, showing that in February, CRE sales activity jumped for the second consecutive month. And it jumped relatively high, maybe a 10-ish, 12-ish point jump. And that was like a couple of times in a row that was showing real interest. So January, more. February, more. But this hasn't yet recorded the Liberation Day, which is when everyone, had that reaction. So we're still about a month out from knowing how CRE activity will be impacted, or will have been impacted by that Liberation Day. The other reason, just in addition to noting that argument is out there and there may be some validity to it, I do think that it's worth just looking at these differences between this current challenging, uncertain environment in 2025 and what things were like in 2020 when we were still saying the same thing about the stock market, and I think it was right. And I think that history bore us out and bore a lot of multifamily investors out, that those who bought during that the upheaval in maybe like the kind of bottom, temporary as it was, of the market in 2020 and 2021 maybe, they really saw some huge valuation growth, huge rent growth, huge income growth, and like that was a success story in a way that is probably different. I think one key difference between now and 5 years ago is that interest rates are way, way higher. They were under 1% in 2020, and they didn't hit 2% till February of 2022. Currently, the 10-year Treasury has been hovering around 4 to 5% since 2023. So that same period where it was between 1 and 2%, looking back from now, it's been 4 and 5% for just that long. So it's not as favorable of an interest rate environment. And as we said before, we just covered from Berkadia how interest rate projections are not exactly they're not expecting the rates to go down. So that's one feature, and I think that may be the most significant feature because man, nothing stoked the market like low interest rates. It wasn't necessarily the increased housing demand in and of itself. Now there was huge rent growth, but the low interest rates people were clamoring on. I think that fueled this kind of ecstatic, irrational exuberance during that time. I remember in 2021 where thinking like, is there a limit to this? Like people, it seems like things are going too well, things are running too hot. And we did get a reminder in 2022. Yes, they were.
Well, I was going to say, not to continue on with the Arrested Development quotes, but all I can think of when you did the, like, is there a limit to it? The narrator voice, like, there is.
Turns out there was.
Yeah. No, I would definitely say that, yeah, interest rates were kind of the biggest, like, either don't head to the sidelines if you're still out there, and if you're on the sidelines, get off because...
Yeah,
you can go make those home purchases. You can buy that apartment complex. Just created kind of a surge of opportunity where it's just like we haven't seen these before, and also just with the interest rates going down, plenty of people that were in that situation of hey, we are the valuation that we're going to fetch with low interest rates is better. This is the time to sell if we want to get into that business, and that wasn't just real estate. There are plenty of other companies that face those challenges of it's never going to be a better time for us to buy in terms of cost of debt, but also anything we thought about selling, the cost of debt, our valuations were never going to be higher. So yeah,
totally. And another key difference I think is in 2020 we were approaching a period in which the home took on this renewed significance to people. They were working from home. There were the lockdowns, which people stayed at home. Apartment size actually increased as a result, and but the home was a big deal for a lot of people. Home prices, of course, spiked up incredibly in that time. So that context back then, that doesn't really operate now. We may be seeing some lingering effects of the increased importance of the home as a result of the pandemic, but they were sharply felt in 2020 in a way that they're not felt right now. So it's a different interest rate situation. It's a different situation when it comes to the pandemic as a driver of housing demand, and there's a different supply and demand situation. I know that the supply wave is kind of receding, and apartment demand has some strong momentum, but that's relative to 2 years, maybe a little more of really anemic rent growth, of a large supply wave, of demand that has taken a bumpy ride. It's now improving, but that hasn't been the case for the past 2 years. Whereas in 2020, there was very strong, stable apartment supply and apartment demand in the pre-pandemic years. There was not these swings, and at least the inherent conditions of the apartment market and the immediate past of 2021 was a lot more stable than now, where we're kind of still recovering from a overbalance, a surplus of apartment supply, lower rent growth. The expectations for 2025 likely are going to be, maybe a little bit below average rent growth, and that's not even factoring in the changed economic situation from the pandemic. So that's where we are when it comes to the apartment fundamentals. They're just vastly different than 2020, and there doesn't seem to be an easy path to the kind of investment bonanza that fell in the wake of 2020. That's probably not going to happen in 2025. However, I can see a path. It's just going to be a big challenge.
Well, another thing I would add to the difference between the pandemic to now, and it's really hard for me to take that back. It's not really hard. It's more so depressing to think back to 5 years ago when I was still in college and going through all of these events.
Yeah.
With 2020, you still had, like I mentioned back, there were plenty of state and city governments that were doing the let's revisit things in 2 weeks to see where the cases are at. Mm-hmm. They were doing the rolling based on the mask mandates if wherever locality it was had them. going through the different kind of precautions and how they were going to go, kind of about how they were monitoring the situation.
Mm-hmm.
But even as they had bits and pieces of, hey, this is a once in 100-year event, and there's things that we need to wait and see. There were also some concrete realities that changed for people within a day. I mean, when I remember in college getting an alert that was like, hey, we're not going to have, it was almost like an extended, I don't want to say an extended spring break, but for 2 weeks, you're not going to come back.
Yeah, I remember that.
And then within 3 days, it was like, no, you're not coming back.
Yeah.
And then, granted, I was in off-campus housing, but at that point, they were like, oh, yeah, I mean, you can live in off-campus housing, and then it became like, you can either get your stuff moved out now, or there's going to be a 2-month period, and then you get your stuff moved out. So, not to say my experience was everybody's experience, but there were plenty of people that either found out instantly you're laid off because, depending on what service they were, their company took a massive revenue hit, or just the way that they do their job on a day-to-day basis was significantly changed in a way that it just wasn't going to be able to quickly adapt.
Yeah.
But there were plenty of people where it was like, starting tomorrow, you are working from home, and you're working from home for the indefinite future.
Yeah.
And plenty of people had to make living adjustments based on that reality.
And currently, aside from and I do want to acknowledge like the firings associated with Doge and government firings. That's a decent amount of people. But like compared to the pandemic, it's not like everyone's fired now or everyone has to work from home now. The lockdowns were a very dramatic thing for a large amount of the population. Like that was felt, and that was a big deal. But now we see tariffs. It's kind of an abstract thing. We haven't seen huge price increases now. We haven't really felt the effects other than in the stock market.
Well, and to that point with the tariff announcements, there's no immediate change for me or for us today that I can definitively point to and be like, we can't do a value add anymore.
Yeah.
I don't know what the prices are. I have a feeling they're going to go up. I think in all likelihood they're going to go up.
And that's why I think we discuss these things.
Right. And so, but there's with these tariffs, everybody is from like a wait and see thing. And I could be completely missing something, but I don't think with this tariff announcement and how things have been rolled out so far, I don't think there's an immediate like, no, society is definitively changed.
Yeah.
It could be for this period,
That's
or
why
just the way you think about things.
I kind of facetiously said like a reordering of the global trade system, like, but because like I do think it's dramatic to say that. However, like that's being treated like this.
I don't exactly think it. I don't think that's overblown.
Yeah.
I mean, if some China and some other trading partners that didn't really have a relationship, like they kind of had the U.S. in common, if they start trading with each other to a point where they don't really need to continue the relationship with the United States, that could very well happen.
Yeah. I think that is true.
No, I don't.
Just as much as like the factories that are being built in the United States, you would think that some of those factories are being built in those countries if they're not trading with the United States anymore.
Well, yeah, and these aren't things that we're going to find out in 2 days. If these tariffs are around for a year, several years, I mean, for an extended period of time,
And how hard do you think it'll be to build those factories?
Oh, when all the raws, when the materials come from other countries,
can't be easier.
Probably pretty tough.
Yeah. So I wanted to foreground all these challenges, and because I think that is the most important and relevant factor in the CRE market and the economy right now is figuring out where things are going, whether it's interest rates, whether it is the length of how long of a construction time is it going to be, or bare bones, are people going to start bidding a lot less for value add deals? Like there's just a whole series of things that these tariffs will have an impact on in the commercial real estate commercial real estate market and the apartment market specifically. And we talked about operations, so it's just a whole big mess of things that are going to be involved here, but that being said, kind of acknowledging that, I also want to point to some signs of strength in the apartment market and in the economy in general. I mentioned the jobs report was stronger than expected, and if you look back at it, the economy was doing relatively well before the tariffs were enacted, and there was some real, some decent stability. There was no imminent, inherent crisis in the making. And I remember saying this specifically earlier this year. There's nothing inside the economy in the same way like that the housing crisis of 2008, there's nothing that's like, oh, this is imminent. You better watch this. It's the corn futures are going to upend everything. Like,
well, we had
yeah.
started the year, I think, with a single digit a probability or percentage chance of a recession.
Yeah.
And now it's at 60.
Yeah. Yeah. So so what we're saying is if this is the cause, we're meeting it with pretty decent strength from an economic standpoint and from an apartment market standpoint. I think that along with the economy showing some real strength behind all of the mess that has been caused in the past like week or month or two, the fundamentals of the economy were really great, aside from lingering inflation fears.